Rose, Longwood Currency Trading. It's toward the end of March in 2021, and I wanted to chat a little bit about analytical trading is not valid if you're a day trader. If you're a longer term trader, if you're up on the hourly charts or the 4-hour charts, let's take it up to the 4-hour charts, where your trades are going to last you a couple of days or a couple of weeks or whatever you're going to do from there, as you define that as long-term trading. You can be analytical in your approach. What do I mean by analytical? Well, it's stuff like what's going on fundamentally in the world, maybe from a macroeconomic standpoint between the two pair of countries. Or if you're a technical trader, you might be looking at long-term moving average crosses or large support resistance levels. And I don't know, if you're silly enough to do Bollinger Bands or fib numbers, maybe that shit works up on the longer time frames. It doesn't really work. It just gives you a more consistent approach of the long-term trend. If the price isn't trending, then none of that stuff's going to work for you anyway. In which case, if you're a long-term trender, you're going to get chopped. But analytical approaches to trading as a day trader are not valid. And again, if you're new to this channel, I've got a bachelor's degree in physics. I was pretty close to a math minor. I spent 33-year career. I had a 33-year career as a senior software engineer designing complex business applications. I've written 7 trading simulation applications, actually probably 8 or 9. They go all the way back from stock options, commodities, and now currencies. I was a real estate investor for 40 years. I get the long-term stuff. I get the short-term stuff. I've been involved in looking at the currency markets since 2007, and I didn't do a live trade until 2012 because I was originally just doing the study of the currency markets for analytical purposes, because that's what I do as a software engineer. You take complex stuff and you try to abstract out the commonality and work solutions based on that. And so my interest in the currency markets, the FOREX market, initially was from an academic standpoint and a technical analysis standpoint. Not technical analysis as far as trading, but what makes the market work? How do you decompose the waves? How do you apply Fourier transform against sinusoidal type wave action and all that kind of crap? And it was a lot of fun. I will tell you that all of that analysis maps down into the day trading in the shorter time frames, down on the 5 minute, the 1 minute, the 1 hour, the 4. It doesn't make any difference. If you look at price action, but there's no scale on the chart or time frame, you wouldn't know whether you were on a 5 minute chart or a weekly chart. You wouldn't know. You wouldn't be able to tell. Because you would have no references to the. I mean, if you had a scale on the side and you saw that your bar was 100 pips, you go, oh, you're probably out on a daily somewhere, But if you didn't have any of that, then you wouldn't know whether you were looking at a daily chart or a 1 minute chart, because it's fractal. I mean, that's what the nature of that is from a mathematical standpoint. Now, you would think from that you could then apply analytical methodologies down into the day trading environment. And certainly you can from a computational standpoint, from a computer standpoint, an analysis or simulation. But there's a problem with that. When you are at the higher time frames as a longer term trader, it's much easier to take the emotion out of the trade, because you can get into a trade on a long-term time frame and you can say, oh, I got that wrong. It's moved 20 pips against me and I'm going to go out. Because you know that really the run that you were looking for was a couple of 100 pips. So, you take a 20 pip loss and you try it tomorrow. Because you're not looking at trading in and out of that position 4 or 5 times a day. Not that a day trader needs to trade 4 or 5 times a day, because a lot of the trades that I make, I trade once a day, maybe twice a day. If I've got a highly volatile situation, it's a one time a day. If I'm normal price action, I might trade 8 times a day or 10 times a day. I might just be in there banging away. But the analytical process, the solution process that works so well on a computer, or works so well when you have longer term time frames that you're looking at, you have time to look at how the price is acting, and you have a lot of momentum behind you. That's like looking at a surfer sitting out there looking at the swells that are building out at sea a little further out, maybe 100 yards out. He's starting to see one starting to build, and he goes, well, that looks like it might carry to the shore. It might build by the time it gets me. So, he sets up on the board. If he feels the thing underneath him, he pushes off and he's gone. And that's a very viable thing that you can do in the longer term time frames. And you can be very analytical about that process. Not that the guy on the surfboard is making it a calculation as to the density of water and the speed of the wave based on the slope of the underlying shoreline under him and the wind velocity, counter offshore wind, and he's not going through all those calculations and just sensing it. And that's what I think a longer term trader, a more successful one, is going to do, is they're going to sense that stuff, but based on all of the analytical studies that they've done. The problem with being very analytical, which I am as an engineer, is that I try to directly apply that into the shorter time frames as a day trader, and it gets in the way of the 50% emotional and psychological process that the day trader is faced with. The longer term trader is not. The psychological and emotional ramifications of long-term day trading may represent 10 or maybe 20% of a trader's toolbox. As a day trader, 80% of your success is based on your psychological and emotional control. Are you going to take that short loss? Are you going to be disciplined enough that even if it starts to go a little bit beyond that, are you going to get out? Are you going to be disciplined enough to let your winning trades run? If you're going to stack, where do you start stacking? If you're going to unstack, how do you propose to do that? And you can't do it analytically. You do it on the feel and the sense of the market as it's moving either for you or it's moving against you. And so analytical processes that I have used so successfully in a real estate investing career and a software engineering career and a physics and math background are not applicable to the day trading as a lot of educational resources would indicate. And I'm not saying it's touchy-feely as a day trader. You just got to go in there and, I feel pretty good about this trade, I'm going to take that. That's not what I'm talking about. I'm far more practical than that. And if you look at the body of work of my videos, this is probably by 90-second video or something like that I've done on YouTube. And I've got 40 posts on my blog site at longwoodcurrencytrading.com. So I've got a considerable body of work that if you go back through it, I know what I'm talking about. And so what I'm trying to do is, if you have a very analytical mind, if you're very engineering oriented, don't try to do day trading. Don't try to bring those skills into day trading. They're better applied to the higher time frames. Now, if you complicate that and you say, well, my personality is one that wants action and wants to trade. I don't want to make a trade and then come back and check it in 5 days to see whether I got my 200 pips. If that's not your personality and you're an engineer, you're going to have a hard time, because you really want to do the day trading. You want to know if you're wrong right away, as I do. I want to know if I'm right away, as I do. I want to take advantage of those small moves, because those small moves add up. If I can make 5 pips a day, I can make a living on that if my bank is large enough. Too often, you guys get involved in the trading and you're playing with mini lots, or you're doing one full lot, or maybe you're trading a $20,000 account or a $30,000 account, and you're at 3 lots, and you're in there banging away, and you just don't have a grasp of your emotional structure, and you don't have really a grasp of the way that you apply the analytical skills that you have had to learn into the shorter term time frames. You don't understand the mix and the balance between those two things. And I think that's where a mentor would have come in very handy for me, if you can find a mentor that would approach you as a day trader and say, well, you're geared for day trading, so let's get in and let's do this, and that would then know how to manage your expectations. In other words, the mentor is managing the expectations of the person who's the engineer, who would be better applied maybe trading out on the longer term time frames, and managing that differently, because what their personality is really geared for is trading down on the shorter time frames. I didn't have that mentoring. I didn't have anybody working with me. I took a course from one of the, he's a tremendous trader. I mean, he's been on TV all the time. So, and his position, when I took his course, he hadn't had a losing month for 22 months straight at that particular time. Well, that's quite a deal. And he was trading with heat, and he was a good trader. So I don't have any doubts in that. But he never was able to address what my skills were. He never recognized what my skills were, and tried to force me into the pattern that he was comfortable with, which was longer term trading. And I couldn't replicate his so-called simple system. It just didn't meet with my personality. Now, I'm sure that a lot of people that were more focused for the longer terms and had personalities for that were willing to do that. But primary to what made my roids flare is that taking a 50 to 70 or 80 pip stop was pretty commonplace with him. And so that just made, I just didn't see that at all. Because I'm too aware of the statistics involved, that if you trade a lot, you're going to statistically hit 6 losing trades in a row. So if you're trading with one full lot, $10,000, and your margin is $5,000, it's going to at least be $5,000. I'm currency pair right now. I'm trading at $6,800. Is the fucking margin. You're left with less than $3,000 of runway to trade with. And so let's just say that the margin's $6,000 and you're left with $4,000. And the person is saying, well, you're going to take a 50 pip loss. Well, that's $500 every time you lose. You lose that 6 times in a row, that's $3,500. You're fucking out of runway. You're done. So, and that's what happened to me. I tried to apply some of those when I opened my first live account back in 2018 or something like that. I lost $40,000, and it went very, very quickly because, number one, I didn't really understand what the fuck I was doing, because I didn't know the stuff that I knew now, because I was coming out of all this simulated background and reading books and watching videos and listening to what all these talking heads had to say. And I thought, well, I got this based on writing computer simulations for 6 years and trading in a simulated account for 6 years. And I got in there and I started out really good, and then I hit 6 losing trades in a row. That took $12,000 off the top of my account. Like it just went, it was gone out of that 40,000. Maybe it was 15,000 that went on those 6 losing trades. So I hit those 6 losers right up front. And that's why when I start out trading, when I change the lot size that I'm trading with, I look at that and I can say, if I go with this lot size and I lose 6 times in a row, what does that do to my account? If I lose 10 times in a row, what does that do to my account? Now, obviously, you scale down in size when you lose big, or if you lose multiple times in a row, you scale, I mean, you just go right back to zero. I've had 9 winning days in a row prior to today. I'm looking at about a 30 pip loss right now. Things running against me, but I've got good structure to support that. I'm going to let it run because I've got the built up in cash because I was trading with heat on those winning trades, that I can absorb that. But it sure knocks the shit out of what will be the monthly returns, because we're at the end of the month today. So we'll see how that plays out. But I had some really miserable, huge losses because when I started, I sold a piece of property and funded my account so I could have a 6-figure account. But I didn't start trading with that 6-figure account right away. I just started with a full lot, and then I went to 2 full lots, and I was just trying to feel my way through that. And I was pretty successful. I was up 2.5% the first week of refunding my large account. 2.5% that first week. That was pretty good. And then I've had 1.5% and 3% days all the way through, but those were with like 1 and 2 lots. So then I jumped my game and did 3 lots. So I'm 3 times the dollar value risk with the same percentages that I'm working with, and I lost 3 times in a row. The start of this month, I lost 3 times in a row, 3 big losses in a row, about $8,000. And so that didn't make up for the gains that I had the previous month, because I was trading a 1 lot. And so I got caught. So I had the 3 big losses at the beginning of the month, and now at the end of the month, we're here. I've had 9 trading days of winners in a row. I just about have brought that back even for the month. Certainly not for the year, but we'll see what happens with the trade that's running today, and whether I can pull a rabbit out of my hat there. And the problem I got into with this trade, after having 9 successful trading days in a row, averaging, I don't know, $600 a day, is that I started to get analytical. Man, it's so hard when you're an engineer not to think in engineering terms. And so you have to be so careful when you're looking at this. So if you're an engineer, you better talk with me because I can save you a lot of money. No, please don't. I don't have time for that. I'm only interested in long-term mentoring with people that are really motivated to do the whole thing. I don't need somebody calling me up on the phone or sending me an email saying, "Oh, well, how do you do your trade setup?" That would not be helpful for you at all. Watch my videos. That would be helpful, but not one-offs like that. Nor can you learn how to trade that way from anybody. When I took this course from this guy, and this was a long time ago, it was $1,000, and it was a long-term course, a 3-month course. So don't expect to pay cheap, because if you get cheap, that's what you get. You get the cookie cutter solutions, and the cookie cutter solutions don't work for you. They don't work for you because is it an analytical solution? Is it a solution that's based on your personality and your emotional makeup and structure? Do these courses address your needs as a trader? Do they address your fears, your hopes, your greed properly? Probably not. I mean, I have a self-directed course where I talk about stuff like this, but I don't have any interaction with you because that is something that somebody who says, I really want to get your reference on this stuff, and I really want to figure out how you're thinking as how you would start somebody out without spending thousands and thousands of dollars to take classes from you. Let me get the idea from you, and then maybe the hope is that somebody will say, well, I'd like to do some mentoring with you, and then I can really sit down and help them. But the course itself is set up as a basis to doing the stuff that I talk about in all my videos. So if you wanted to take that course and then go back and listen to 100 videos, you might get it. I don't know. All I can tell you is leave the analytics on the kitchen table when you're trading, please. And look at the price. This is if you're a day trader. And look at the price action as it corresponds to your emotional connection with the market at that particular given time. You might get up and be all cranked up because you had a couple of winning days in a row and you're ready to hit the boards running. Well, that's a different emotional structure that you're coming to the table with than if you had lost yesterday big time. Today, when you start trading, it isn't the same. It's got to be different. It's got to be handled different. You may want to chop your size. You may want to wait for that perfect trade, and instead of doing a day trade that's going to grab you 8 or 10 pips or 15 pips, you may want to go, geez, I got to slow things down. I'm going to look for a swing, and I'll try to go for a 50 pip run over the next week or so, because macroeconomics are supporting that. We're gonna have a trend situation coming up here. But please manage your expectation as to how you can apply any sort of analytical thought process or methodologies that you have if you're going to be down on the day trading frameworks. And if you're up on the higher time frames and you are not analytically inclined, you need to really do a lot of studying. You also need to look at your emotional and your psychological makeup and make sure that the analytics that you're going to be studying and learning are consistent with that structure. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.